This is the Friday, October 2, 2020 version of the Market Plus segment. Joining us now, Naomi Blohm, Elaine Kub, Matthew Bennett, and Ted Seifried. Panel time, everybody. Thank you so very much. You are all such good sports for doing this. We always appreciate that. And the Zoom technology doesn't always allow for the best interaction, but thank you for doing what you can. So we got some questions from Facebook and Twitter. I'm going to try to plow through these, but, you know, like normal, we might get off the rails. So Matt and Ted, you two were fighting on Twitter over this one, but Matt, I'll start with you. Timothy in Houston, Minnesota, the beautiful southeastern part of the state. Timothy is asking, using the latest WASD numbers, where does that put the 20 and 21 carryouts? 2021 carryout, sorry. Matt?
Well, if you just use what they used last month and then you take the stocks away, you know, because we are going to be beginning with a much lower number, just sub 2, you know, you're looking at like a 227. And so if you start thinking about, you know, where does that put us, you know, or where do I think that we're going to be? I feel like we're going to have to trim a little bit of yield based upon early yield reports that I've heard. First of all. Second of all, I mean, the export situation, is China really only going to import 7 million metric ton, or are they going to import what they've already purchased as far as sales go? And so to me, I think that they're going to have to make some adjustments there. And so I think that you're probably a heck of a lot closer to 2 than what even maybe the trade is ready for. I'm not sure that we're going to get that number on Friday. I just feel like that's where we're heading. And quite frankly, that's where my official estimate is going to be.
Ted, you like to do math. Do you agree?
Yeah, so I mean, there's kind of a difference between what we think the USDA is going to say on this report on Friday and what we think the ultimate numbers are going to be. The USDA tends to be cautious about really jumping into things. And you know me, I am not very cautious when it comes to things like that. And I see the exports that we have to China, and I want to slash 200 million bushels off the ending stocks because I want to throw that onto exports. But they're not going to do that right now, I don't think. So for this report, translating what happened on the quarterly grain stocks report with what I think should happen on yield and what I think should happen on demand, at least to stair step in, I'm at a 295 million bushel carryover for soybeans. But realistically, I think that carryover is maybe 215 or possibly below that. Again, in price rationing territory or pipeline territory for soybeans. Now, as Elaine was saying on the regular program, corn's a little bit of a different story. We are not in a price rationing situation for corn. We are in a less bullish than what it had been before situation for corn. So my corn carryover on this report is going to be a 2.267 because of the lower beginning stocks. But I also think they're going to cut a little bit out of the feed and residual. Ultimately, I see that carryover dropping below 2 billion. I'm at a 1.977 billion bushel carryover for corn carryover, but that's my final number. That's not what I think we're going to see on this USDA report. Big picture, on this USDA report, we have this tendency, once we see a really bullish report, like we did on quarterly grain stocks, we have expectations that we're going to see another really bullish report on the following WASD report that always comes within 10 to 12 days afterwards. We usually get disappointed by that. But I love that it's on a Friday because I think what's going to happen is we're going to have a little bit of a mildly disappointing number. We're going to walk away, take the weekend, think about it, realize that, wow, that soybean number is really tight and getting tighter. And that corn number's come down a lot since we were talking about a 3.8 billion bushel carryover. And then I think we're going to get a bullish reaction out of it eventually.
Okay. All right, Naomi, it looks like you were maybe wanting to chime in on the math that you've done. What do you agree with what they've been saying on the carryout side?
They both bring up great points. It's just a matter of which numbers do the USDA want to tweak, massage, or go after on Friday when they already did such a big adjustment on this report that we just had this week. So looking forward, I think the beans have the biggest story and the biggest potential to lead us going forward. The corn, if it comes anywhere between 2 and 2.25 billion bushels, it's pretty much as expected. It just depends on primarily the yield, if they do any big adjustments or not. I don't know that the market gets overly excited unless we see soybean numbers come in below 300 million bushels. And unless we see that corn carryout come below 2 billion bushels, we'll see if they're that aggressive on this upcoming report or not. It definitely has the potential to go that direction, though, in the coming months.
Elaine, we like to talk basis. Well, I like to talk basis with all of you, but this one comes, this is a question from Prince Peterson on Twitter. He's asking about how does farmer sentiment towards the USDA affect the market and also seasonal trends. He said, did the farmer really know the crop wasn't there last winter that would, in his eyes, indicate a strong basis?
Well, if anybody knew that the crop wasn't there, it would be individual farmers who did not physically have the crop or had it waiting in the fields to get harvested all winter and, didn't know exactly how much you'd get harvested in the spring. Regarding basis, I don't know that we did see that behavior, like the farmer selling behavior did not seem to be what affected the pretty normal basis through most of this marketing year. And now it's starting to get stronger basis. And again, I don't think we have any evidence that it was a pattern of farmer selling. I think it's just a legitimate recognition by the commercial side of the market that they aren't seeing as much grain physically around, obviously, as we saw in the green stocks report. That's just what it's reflecting.
Okay, well, Matt, Craig in Minnesota asked us on Twitter, and I'm going to ask you now, and this is something, I guess, look out your window. Should a farmer sell corn off the combine? So are they selling the corn off the combine in your neighborhood there this fall and re-own it with a call option, or put corn in the bin and see where the corn market goes this winter?
Okay, let's talk corn and beans just a little bit. There's no carry in the bean market. And so the market's kind of telling you that maybe you want to move beans. But at the same time, we've been talking about the chance for the bean market to rally. So, what would I do in that situation with the two? If I'm going to be selling beans, I want to keep ownership. If I have to sell corn, I like owning corn, quite frankly, at this point. I feel like, if you're hauling in across the scale, quite frankly, it's pretty tough to pay commercial storage for me whenever I can go out to July and own like a 80-cent window on a call spread with an at the money purchase at around $4. I can own that cheaper than what I could store till Jan 1. And so I like that kind of an ownership situation. What's the farmer doing? I think that, there's a lot of, let me go back just a little bit to Elaine's question a little bit. This quarterly stock situation basis going into harvest was actually pretty good. And then you saw that spreads and carry were pretty narrow. And so what did that tell you? Probably that maybe there wasn't near as much corn sitting around as what everyone thought there was. Did the farmer know it? What we have to understand is that the USDA is the boss. And whenever they print a number, that's what the market trades. And so the farmer has to understand if they really feel strongly about something like that, there are tools that they can manage risk moving forward. And that's something that we can all work with them on. But bottom line is, I don't think the farmer, if they knew it, they probably didn't react accordingly, because quite frankly, holding on to the corn for that long without any risk management, that's a pretty tough thing to do, especially coming after several years of tough economic times.
Yeah, let me build on what Matt just said. He brings up fantastic points. In addition, with this year of 2020 and all the volatility that it's brought, there's going to be more volatility coming with the elections, with election results, with how China does with their buying, and just more potential weather effects and weather possibilities going into South American production. So this is a year where you really need to brush off on your marketing skills. You need to understand all of the tools at your disposal, because you should have price protection just in case something happens where all of a sudden prices fall apart lower, like we saw in March with COVID. And on the flip side, if there's another weather event that should take market prices unexpectedly higher, you just almost have to be ready for both scenarios any day of the week that you wake up. So brush up on your marketing tools. We all are people who can help you with that. And if you have questions, reach out to any one of us. We'd be happy to help.
All right. Well, Naomi, that's a good question. And it brings up one Chad in Iowa is asking us via Instagram. And Ted, I'll let you answer this one. And it's about marketing a little bit. This is more of a specific, let's help this scenario. Chad in Iowa, he's in Northeast Iowa. He says, we have zero carry in our local cash price for corn and soybeans out to at least March. What would be the recommendation for unpriced bushels?
Yeah. So a couple of things. And I'm going to go back to a couple of the other questions too. One, Matt, there's a reason why there's no carry in the soybean market. It's because it's a bull market. Secondly, that makes it very difficult for reownership strategies when you go further out in time, because you don't have that big discount yet. It's not been a mature bull market yet. It's a developing bull market. So you don't have a big discount out in those deferred months. Once that happens, selling up front, buying calls in the back is going to be the absolute best thing to do. So we've got that kind of developing. Harvest is going to kind of keep that in check a little bit. Now, for unpriced bushels, well, Is there a whole lot of unpriced bushels out there? I mean, from a lot of the things that I'm hearing, producers are about 60% sold on new crop already, which is a record at this time of year. So a lot of those bushels coming to town are already sold. Is that going to really produce a whole lot of harvest pressure or a lot of pressure on basis or not? And that is a big question that we're looking at. That being said, the underlying theme here, and it'd be better if we could go back 2 months and talk about this. Re-ownership is the way to go. There is a tremendous amount of upside potential, especially for soybeans, but also for corn and to some extent for wheat, that yes, if you are having to sell off the combine, you want to re-own on the board. And to Matt's point, it is cheaper to re-own on the board, sell cash, re-own on the board, than it is to pay for commercial storage. So that is a very viable way of doing that, and do it before the spreads flip even further, because now's your opportunity.
All right, Elaine Kub, what role is the dollar having in any of this discussion? We've kind of left that one out. Where do you see the dollar as its impact here on commodities?
It's the potential for volatility that Naomi mentioned. And I think from a fundamental standpoint, I would agree with all of you that there's not a whole lot of downside in these markets until you start to think about the outside markets and the volatility that could come in from the election or any sort of external shock. And we have seen that in the last couple of weeks, the dollar has gone stronger, and probably because traders are seeing it as a safe haven. It's a place where when the world starts to get uncertain, the dollar tends to go up because that's where investors are parking their money, and that tends to be bearish for commodities. So that's maybe the biggest threat to the downside in these markets. Other than that, it feels like there's not a lot of fundamental downside, but I would just want to make a statement here that anytime you're re-owning bushels, that is the opposite of risk management. That is just retaining all of the same price risk. So I guess I'd be more leaning towards Naomi's strategies of managing the risk rather than re-owning the risk.
Okay, we're going to close with one.
Wait. Paul, can I jump in on the dollar here for a second?
Go ahead, Ted.
Yeah, okay. As far as that U.S. dollar is concerned, it has started to bounce off the lows a little bit because of what happened with Ruth Bader Ginsburg passing away. There is now a vacancy in the U.S. Supreme Court. Trump intends to fill that. So the idea is that Democrats and Republicans are not going to be able to come to terms on any sort of, really any matter, but certainly a matter of stimulus between now and the election, which means that we're not going to dump another $2 trillion in on top of that dollar to push the dollar down any further. So when that dollar starts to come back up, and by the way, it held key support Thursday and Friday, it looks like it might want to bounce. That is a concern that we have for exportable commodities, specifically agriculture, but when we're talking about wheat, that is what we're talking about. Ultimately, there's going to be more stimulus coming. When it happens is going to be the question. That dollar, I think, is going to see more pressure, and that's going to be a beneficial thing for the grains as a whole, I believe.
Matt?
I'd like to say something real quick too. And so to quantify what I'm saying, if a producer has to sell across the scale, or if they're got to go to the elevator, if they can't store it at home, I like the idea of, this bean market has rallied about $2 freaking bucks. I mean, sell the beans. A lot of producers I've talked to are happy with their beans. They're not saying that it's a record yield by any means. In 2018, in my part of the world, it was a record crop. Everyone you talk to. We're not seeing that right now. It's part of the reason why I think this bean yield might be dialed back a little bit. But still, if you've got 70 bushel beans and you can sell them at 10 bucks across the scale, $700 an acre. What if I spend 20 cents on some sort of a call strategy? I like that because I've quantified what the least is I can get from my crop. Right. Or I like Naomi's idea of, if I'm not going to do anything, by golly, put a floor under the market, do something so you can go to bed at night and sleep and not worry about it if something crazy happens with regards to the election. Same type of thing on corn. I like the fact that I can quantify exactly what my situation is and then give myself room to run to the upside. I think it makes a heck of a lot of sense. But I think all of us would agree that doing nothing is probably the worst thing we can do right now after we've seen a 60-cent rally and a $1.80 rally.
Right. And I prefer that first option. Use the cash market to manage your risk. Make cash sales. And then use the board, call options, futures, however you want to do it. Work with your broker to figure out strategy and what your risk tolerances are. But use the board to re-own opportunity. Risk management, managing the downside, should be done with cash sales right now. Managing opportunity, that should be done with the board, call options, futures, what have you.
All right. I have to cut it off because Tiffany is going to really be mad at me because I kept going. And you four are always so good. I appreciate your time. Ted Seifried, Elaine Kub, Naomi Blohm, Matthew Bennett, you four, thank you so very much. always good to see you all. And next time we'll do this together in person, I hope. Next week, we'll look at how sheep producers are finding a glimmer of hope in a tough time. And Don Rose will join us to analyze trends in the commodity markets. I'm Paul Yeager. Thank you so very much for watching, listening, or reading. Have yourselves a great week.